4, 3, 2.
Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Nasdaq Felix Options Trading Floor for quadruple witching options expiration. Joining me for the morning is Sean Cruz. He's the Manager of Trading Strategies over at TD Ameritrade. We're going to focus on millennials and investing. And Sean, TD just released a new survey on how millennials feel about their financial future. And despite coming out with $1 trillion in debt following college, which I think is an astounding number,
it's a huge number.
They seem to be pretty positive about their financial future.
They do, and that was really interesting. So the most thing that stood out was when we looked at the survey, 53% of respondents said they actually expect to be millionaires at some point in their lifetime. And the interesting part of that was there was 20% who also thought they would never be able to pay back their student loan debt. So I think that's half thinks they're going to be millionaires, and then there's a good sample of the population who don't ever be able to pay back some of that $1 trillion of debt.
How do millennials define life milestones?
So I think what they look at when they look at life milestones, there's a few things they look at. One is obviously when they graduate college, they expect to get a job in the chosen field of study. The next thing is when they become fully financial independent, which a lot of them view as when they actually move out of their parents' house. That's when they consider the financial ties severed and they're officially on their own.
Well, I find it interesting how they approach retirement because there seems to be a wide disparity on when and if millennials plan to retire. Tell us more about that and how they spend their time and saving habits.
So the interesting part is, so a lot don't actually plan to start saving for retirement until they're 36. And you think about that, that's almost a decade past when they consider themselves to be financially independent. And then they also expect to retire when they're about 56. So they're really giving themselves 20 years to retire millionaires. And that's, for me,
do they expect to be the next Steve Jobs?
I know they're an ambitious and I think optimistic group for sure. And I think from the saving habits, there's actually been, I think, some positive changes in that. The last time we did this survey in 2016, 63% said they considered themselves to be savers. That number's actually trended up to 70%. So that's the direction we would like to see that going in. The interesting things are what they save for. The first thing they all said they were saving for is some sort of a vacation. Then they also said that they were saving for an emergency fund. And then the third thing was usually college for their kids was also another popular response.
So I get being ambitious is a good thing, but missing out that 10 years is pretty crucial in my mind. And explain to us, why is saving young important? I mean, compounding interest kind of comes into play here.
That's a huge thing. One, just by learning to save anyways, I think you teach yourself to be a little bit more disciplined financially. It makes you really have to put thought into where you're spending your money when you get it. So I think the benefit, though, you're missing out on 11 years of potential compounding interest as you continue to put money away. And if you think about it, if you are an employee and you're getting some sort of 401k match, if you're not taking advantage of that, that's almost 11 years of
free
salary, free money.
Yeah.
And that's what someone told me when I first started. They said, whatever your employer matches, you should put that much away as well. Otherwise, you're leaving free money on the table. And for 11 years, when you only expect to have to save for 20, that's 30% of your saving.
I'm sure you've also had personal experience like this. It's one thing to plan. I'll do this when I'm 36. I'll do this. Well, kids happen and life happens and emergencies happen. And, that savings plan could get cut off if things are more immediate. So I think it's concerning in my mind that you would, not take advantage of a decade when you're young, you're healthy, you're able to work, you have that energy, you can pull those all-nighters. But with life happening in between, you don't want to miss out on those opportunities. So with that, what are the best tips that are offered on the survey for millennial investors?
So I think definitely the first one is start saving and start putting away for your retirement as soon as you can. You want to make sure you also not only to have your 401k and take advantage of your employer match, but go out and set up an IRA, and to the extent that you can, put money away in there. And it may not be every month, but maybe it's your tax returns. Maybe it's a little bit of your quarterly or annual bonus that you get. Start putting some of that money away. And then there's other things you can do up front. And I think this is really more important just as a life lesson, is negotiate your salary. I think you should at least be ready to go to any potential employer and say, here's what I think I'm worth, here's why, and try and see what you can get as much as you can. Because once again, by doing that, you're not leaving money on the table. So you do those two things, negotiate a little bit more of a higher salary. You start taking more advantage of your 401k match. You do that for 11 years and that starts compounding. That makes a significant difference in where you're going to be further down the road in retirement.
Right. Particularly for millennials, you're more of an ambitious bunch. That conversation shouldn't be hard to have with negotiating your salary.
And then the last thing is just educate yourself. I think being financial awareness is very important. That's why TD Ameritrade, we're very focused on an educational offering that we can offer to all of our clients for free. So I think it's not too much time either. We're not asking for 5 hours of your day. 30-minute videos, hour. We even have some even shorter videos that you can go online, watch, and interact with. I think it's also another important step to making sure you're in control of your financial
Even
future.
the advice you just gave in the past 5 minutes is perfect. So you need to listen to.
It's a good start.
It's a great start. Well, thank you very much, Sean, for all of that. And thank you for joining us throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.